Hey, it's Mac with PriceActionTradingSystem.com, and it's Thursday. It is January the 7th. This will be our chart lesson for today, and we had another really strong trend up today. I saw that. This is how I saw it early on. I wasn't really sure if there's an overshoot up here. I don't think it really matters. Once it plays out, if you move it all the way to the top, you could make the argument that there does appear to be some midline work in there as well. But the way I looked at it was this was your channel, and this was an overshoot on just a overly strong market, and then we were turned down, and you can still see that midline. It looks really accurate, so I think you could play it either way. Uh, Only difference was once we had this overshoot, I wasn't scared to short right here in this range, and I'll explain those trades when we get to them. Normally, I probably wouldn't short that until we had a confirmed trend line moving down. But that range, it started over here and we broke out of there, but then we got right back in it. So it was obvious. I mean, you can clearly see the support and resistance. So it's probably something you could trade either way. So, but we'll talk about that a little more when we get to those trades. But you were better off to really trade these shorter term channels and trends anyway. Really, the bigger picture just kind of helped you to understand where we were headed and what the direction was. So I still believe that you want to narrow into these smaller patterns to try to trade them. So this is another strong trend up, and this was just a two-legged correction after this leg up. We ran out of days, so there's no way we're going to make a measured move. Obviously, at this point, we're actually about to go into the next day here in a few minutes. So I would still look for the possibility that we'll make this measured move up. And just to show you where that would be for any of you that are new, you measure this first leg and then move it over to where we started back up. And that gives you a target up here well above 30. And believe it or not, we're back at 3,800. So this market is just, it's ridiculously crazy. But don't argue with it. Just trade what you see. That's all you can do. And if you argue with it, you'll just end up being disappointed with yourself. So let's back out here where we can see this a little bit better. And we'll go through the trades and we'll wrap it up. This is Thursday. No chart lessons on Fridays. I'm taking one day a week off just to get a little break from the chart lessons. There's a lot of work that goes into these. So I would like to say real quickly before we get started, you've probably noticed it's been sporadic, but occasionally for anywhere from 30 seconds to sometimes as long as 5 minutes, the website has been hourglassing and kind of hanging. And I spoke about that on Monday or Tuesday, I believe. But I think we found the problem. I had support really digging into it, and I think we found the problem. And for the last, we had quite a bit of problem with it from about noon to 2 or 3 o'clock. So that's when I got on the phone with support and had them digging into this thing. And I think we found the issue. And the site seems faster than ever. And I haven't seen an hourglass yet. So hopefully this took care of it. If it doesn't, I'm going to be on top of it. We're going to continue to dig until we find it. But I hope this was the issue. They seem to think they found the problem, and I think we got it resolved. And so far, so good. I haven't seen even just a momentary lapse since they got this fixed around 3 or 3:30, something like that my time. But anyway, the last hour or so, this thing's hummed faster than ever. So, and it should be because we did a big upgrade and upgraded to a new server and everything not long ago. And that was supposed to solve any problem. So it's not a problem with bandwidth or server size or anything like that. There was some kind of PHP issue in there, and I think they got it resolved. But anyway, I don't want to beat that bush too long. Let's get on to the trades here. 7 o'clock came right as we made this high moving across here. We just went into this range. Now we traded up into this range, so most likely there's a chance we're going to go higher. We could, since we had a trend down, it's possible we could try to come back down to the trend line. But really, when this thing comes down and confirms this trend line, and you really, early on, I had this drawn a little steeper, and there's probably a shorter term one in there that is steeper. But in the end, I believe this yellow one to be the correct one, and you can see it coming into play. But and you can see that midline playing all the way up through there. But we really, on this first long here, just after 7 o'clock, actually it was close to 8 o'clock right here when this trade set up. But you don't want to trade this. There's just nothing in there. The only way you can trade this is if you got room to scalp out from where you enter, and you only enter these longs off the lows with a good signal bar, or shorts off the high with a good signal bar. That's a pretty good signal bar, but you don't have any room right there, so you can't take that short. It ends up dropping all the way down, but it's still, most of the time it won't. It'll bounce there again. So when this fails and breaks out, what happens on most breakouts? They fail and prices turn back, even if only temporary. So this gives us a great long at the low of this small range here to get long with a great signal bar. And as long as you got room to get out for here, you're good to go. And if you take this trade, guess what? You can catch this whole move. It's the only trade you need all day probably. And so that was a great setup. And that, once again, even though this is not a big range here, this is more like congestion, this is still an important low on a failed breakout. You hear me talk about that all the time. Sometimes these are aggressive trades. This one's not, because it's with the trend already, and there's a possible trend line there too. So this one's not even that aggressive. And look at the payoff you get for it. So pay attention to those. And then, of course, we run up and we just went sideways again. And you just don't want to be entering this far away from the EMA. And then finally we come back. We don't quite get back down here. This is just an inside bar. It does make an equal low, so you could consider going long there, but I'd wait. It's just a first entry. So if you wait till the second entry, it's right here, and we're back at the trend line. And this is another great example of why we scalp out for 4 ticks, because there's exactly 6 ticks from this high to this high, which is what it takes to scalp out with 4 ticks, because we're buying 1 tick above it, and then you need to tick 1 tick past your 4 ticks to fill a limit order. So that means you need 5 ticks. So it takes 6 ticks to get a 4 tick scalp. And you got exactly that there. If you entered 1 tick late, it would have come down here and stopped you out and then gone back exactly where you thought. So just keep that in mind. There's a reason we only scalp for 4 ticks. And if you start monkeying around with the strategy, you're just going to, I mean, we've already done all that for you, so don't waste your time trying to change things. And we already know what works. If you do try to change something, make absolutely sure you test it long term on a sim trader. Because if not, you go trading live, guess what? You're going to be a donator. Don't be a donator. But anyway, you get a second entry long there, easy scalp. It comes back here and makes a failed second entry short, but it also confirms that trend line right there. And that bar is only like 6 ticks, I think, 6 or 7. I can't remember what there was in that bar. 5 ticks, so it's even smaller than I remembered. I think there's another one in here that was real small. Maybe it was 7 ticks. But it's mostly bullish, and the fact that it's a failure, it doesn't matter what the signal bar really looks like, and it does confirm that trend line. So just go long right there, and guess what? If you catch that one failure, confirming a flatter trend line, you get another easy runner. And this thing runs for 71 to, I mean, that's 23 points. And even if you don't get all of it, you easily get 19 to 20 points out of it. And then this is where you get the overshoot. I treat this like an overshoot because you can see it comes back and it bounces right around that trend line. You can see that. And I marked this trade right here because it is a failed second entry short, and it is a higher low that's back inside this trend line. I wasn't crazy about it because it's right here at the upper trend line, so I made it green, but there's still some reasons to like that trade. This may be the one that was 7 ticks. I don't know why my mouse is acting up. 6 ticks. So anyway, again, you get an easy runner on it. And then now I'm just playing this yellow channel. And it's pretty obvious that it's in play. We run up here, and then we just start going sideways again. You don't want to short this thing yet. And there's not really any longs in here you can take. And so it just keeps working up here. Again, I just don't see anything too congestive. You don't want to be shorting yet. So finally you run back down, and then you get back inside this sideways again. I mean, look, it's already proven. You get back inside of it, and you try to go higher once, twice, and that's a second entry short with a big bearish bar right at the high of that. And that's the first break of this little channel. So this is the first time I feel comfortable going short. If it weren't for the range, I'd probably say skip this one. This actually should be. But you can clearly see that range. And we just get right back inside it here again. And again, that's a second entry short. Closes below the EMA. At first, I was looking at maybe this trend channel. I drew this trend line right across these lows, and I had it drug up, and then I pulled it back down. But in the end, when I got a little more price action, I think this was probably closer to being correct. You really didn't even need that other than knowing where it might bounce here. We'll talk about that in a minute. But I like that second entry, and then you just get another second entry short with a triple test right here with a nice signal bar. This one you probably get a runner on, even though you're not expecting a runner there. I probably would have just scapped out regardless because it does pull back and test that. I don't think you want to enter on that bar, and we're too far away from the EMA here. And then we bounce back up, and we just come. You obviously got you've got this small channel going here, and we actually get an overshoot of it. And so I like that short, just being that far away from the EMA. This breaks higher first and turns and goes out the lower side. And this is congestion, so you can treat that like a little failed breakout. Prices are probably going to come back to it. You can see that right there. And the key is entering one tick below this. I don't think I would enter here because you're too close to the EMA. It doesn't matter in the end, but this is where you'd want to enter. And then you get another chance to enter right here on a lower high. And really this has moved a pretty good bit for a lower high, but it's such a good signal bar, and it's clearly just one leg down, so you're probably going to make another attempt to go lower. And you may make a new low, which means prices have to come all the way down to right here. And that's a pretty good move. I mean, if you just look at your measured move, you're looking at a strong possibility of a pretty good move from there to there. So that's what I was looking at here, but it's just a first entry short. It's not a failed second entry long. It is the first break of this channel coming down, and you would expect that prices are going to try to make a new low, and usually it takes 2 legs to do that. So this would be your possible target. The key is just, do you have enough room to get out before these lows? If you do, take the trade. If you get a setup like this, in other words. And notice those are both green. And then we bounce here again, and after we bounced here again, it's obvious this trend line's in play. And then notice you get a first entry short, a second entry short. There's a new swing high there. You get a first entry long and then a second entry long. So it's a failed second entry short and a second entry long and a great signal bar. Just go long right there. Doesn't take on off, but it's a quick, easy scalp. Comes back, and you try to go lower once, and you make that little double bottom. I like this one mostly because there's two legs there, and you get this nice bullish bar right before the close. And then secondarily, I don't have it on here, but there's a little range. And basically, you're just filling out that range. But we just came off this low here. And this is basically just a higher low off this low. You do need to be careful about how much room is back to these highs. So if you're going to enter this one, you probably have to let it break higher and then drop a limit order enough to get out, far enough to get out. And that's another reason. And it's almost 2 o'clock, so that's another reason why it's green. But it probably would have backed up enough to fill you. And notice how it did get resistance there before it took on off. And it didn't go much higher. It just went to the other side of the range, really, or the channel. So I'd probably skip that one that late in the day, but I wanted to talk about it just to show it. If it was earlier in the day, I'd probably be more inclined to take that higher low there. And this, because it's been a big uptrend. Even though there was some corrections in there, there's still a big uptrend. And again, I don't think I would short this because of the channel coming back yet, but I like these shorts just because that's proven resistance all across there. We're in it earlier and we break out, and then we're back in it again. So it's we've proven multiple times there's strong resistance there. So I like that as just a range trade, not because we're turning down necessarily. Although there is only one leg down, you would expect that other leg down. And I can't remember if I showed you that measured leg or not. There's leg 1, and there's leg 2, and it's almost a perfect measurement. We've actually bounced right off the midline there. So that's a clear 2 legs down, and then we started up again. So, and somebody else asked me about that again, about that today, about some other trader that's selling some two-legged pullback indicator, and there's not an indicator that can pick out second entries consistently enough for you to use it and make money. I'm just telling you, it doesn't exist. If it did, I wouldn't be sitting here all day at the screen. I'd buy the thing myself, and I'd set it running, and I'd let it go. But it does. Sure, it can pick out second entries, but the key is the context of what. And it can't read the context of the chart. Only a human brain can do that. So far, nobody's been able to program anything that will consistently make money. The only people who can do it are just humans. Sure, there's some algorithms, but those guys have got such deep pockets, you can't do that. They can afford to be wrong long enough to always be right most of the time. You can't do that. Me and you can't do that. Only people with millions and millions and millions of dollars sitting in the bank can afford those kind of drawdowns. A retail trader, most of us can't do that. So don't get caught up in that stuff. People come and ask me about them all the time, and I hate to down. You won't hear me ever talk about other people's products or try to down people's products. I'm not going to ever say any names. There's only two guys that I'll mention their name. Most of you know who they are, and I won't even mention their name again. They ripped off our materials and repackaged them and sell them on their own as futures experts, but I won't even go down that road again. You won't hear me do that because I'm not that kind of person. I don't care what anybody else does. All I care about is what works. And I'm just telling you, there is no indicator and there's no software that's going to make you money. Don't pay big money for that stuff because it doesn't work. Now, if you want to buy a second entry indicator that helps you find second entries, that's one thing, but don't think you're going to get rich trading it. It's just not there. So anyway, I'm going to wrap this thing up. Hope you had a great week. It was a fast one. Can't believe the first week of trading's already over for the first of the year. And next thing you know, we'll be talking about the end of the year again. I don't know where they're going. Be careful out there. The market could get volatile if if we continue to have protest or whatever they want to call it, or fighting in the streets and people getting shot at the Capitol and trying to break into the Congress. I mean, it's craziness, and I don't know what the answer is, but I doubt this stuff is over yet. And so just be careful because the volatility could jump up, something crazy could happen. So always be on alert and just trade safely. Never trade without a safety stop, and always put it at either one tick below or one tick above your signal bar. And then the worst you can do is have a losing trade no matter what happens. And so I'll leave it at that. I'm going to wrap it up. We'll be back again Monday. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next